We're jumping straight into Intel today. Everyone is watching the price action, but the real story is the 18A node and the AI PC resurgence.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the silicon weeds, do us a huge favor, hit that subscribe button and smash the like. It really helps us keep simplifying this crazy market for everyone.
It does.
Now let's talk about the chip giant that everyone loves to debate. This week has been absolutely fascinating for anyone watching this space.
It really is the battleground stock of 2026, isn't it? If you just look at the sheer volume of debate online, the forums, it feels like everyone has a stake in this fight. It's so polarized.
It absolutely is. And looking at the trailing 12 months leading up to today, January 24th, 2026, the stock has been on a wild ride.
I mean, just wild.
We aren't talking about a gentle climb. We're talking a massive surge. Depending on when you timed your entry last year, you're looking at gains from roughly 84% to, 130%.
Huge gains. The media has been framing this as the great resurgence story.
The return of the king, so to speak. But then we get the earnings report this week, and suddenly things get complicated.
Complicated is the right word, maybe even messy. But I think to understand the mess, we have to start with why the optimism was even there.
Right.
You don't get a stock doubling in a year just on hype. There were some fundamental improvements that got people really excited.
Okay, so let's get into the hard numbers that just dropped for the fourth quarter of 2025. This was supposed to be the victory lap.
It was.
Revenue came in at $13.7 billion. To put that in perspective, the consensus was only about $13.4 billion.
So a solid top-line beat, a respectable beat, especially in this kind of environment.
And it gets better. Adjusted earnings per share EPS came in at 15 cents. The expectation.
What's 8 cents?
Yeah. They nearly doubled the profit expectation.
Yeah.
And the data center and AI segment
That's the one to watch.
grew 9% year over year to hit $4.7 billion.
And that data center growth is key. I can't stress that enough. For years, the story was just bleeding market share there.
To AMD, yeah.
Exactly. Seeing that stabilize and actually grow 9% is a huge signal. It suggests the bleeding has stopped.
But I think if we zoom out, the reason investors were bidding this up over the last year wasn't just one quarter. It's the bigger narrative.
Oh, absolutely. The national champion narrative.
The macro thesis that trumps all the quarterly noise.
National champion.
Yeah.
It sounds like they won the Super Bowl of semiconductors. What does that actually mean for an investor? Is it just patriotic marketing?
In a geopolitical sense, they kind of did. We have to talk about the moat here. This company isn't just a business anymore.
No.
They are effectively the U.S. government's bet on sovereign silicon. Remember, they secured that massive $8.9 billion in CHIPS Act funding.
Right, but even more important than that, the U.S. government now holds an equity stake.
A 10% stake, which is just wild to think about.
It is. The government isn't just a regulator, they are a major shareholder now.
And that creates a safety net that, a competitor like TSMC just doesn't have in the same way.
It's a hedge against deglobalization. The government has skin in the game. They need this turnaround to work.
Okay, so if the government is the defense, let's talk offense. The actual tech. We keep hearing about 18A. What is it?
It's their 1.8 nanometer process node. And 18A is the reason for all the hype. It's the holy grail of their roadmap.
This is what's supposed to put them back ahead of the pack.
In terms of performance and, crucially, power delivery.
Okay, hold on. Power delivery. Why is that the killer feature? I thought we just wanted chips to be faster.
It's a great question. As chips get smaller, feeding electricity to billions of transistors becomes a nightmare.
Like a traffic jam.
A huge traffic jam. You get interference, you lose efficiency, the chip gets hot.
Right.
So they have this tech called power via. Think of it like this. Traditionally, all the power and all the data are on the same roads on top of the chip.
Chaos.
Total chaos. Power via is like building a dedicated subway system for the electricity underneath the city.
Ah, that's a fantastic visual.
You move all the power to the back of the wafer, leaving the top free for data. It's cleaner, more efficient, faster.
So they've rewired the city. And we're finally seeing real products. They launched the Panther Lake processors at CES a few weeks ago.
Right, and that's a big deal. Panther Lake is the first mainstream chip built on 18A.
And it's powering over 200 new AI PC designs.
That's tangible market penetration. It proves the node works.
And AI PC is another buzzword. This isn't just a laptop with a chatbot sticker on it.
No, this is hardware.
Yeah.
These are machines with dedicated neural processing units, NPUs, built right into the silicon.
Okay, break down MPU for us.
So think of the CPU as the general manager. The GPU is the artist for graphics. The NPU is the mathematician.
I see.
It's designed specifically for the math needed for AI models. It means you can run stuff locally on your laptop without sending data to the cloud. It's faster and more private.
That makes sense. Privacy and speed. Plus, the ASIC business is taking off.
Application-specific integrated circuits, it's hitting a $1 billion annualized run rate.
And what are ASICs exactly?
Think of it like a custom-tailored suit versus off-a-rack. Companies like Amazon or Microsoft want a chip designed specifically for their unique workload.
And they'll build it for them.
Exactly. They're targeting a $100 billion market there. It's a huge pivot.
So the bull case is clear. American manufacturing dominance, massive hardware replacement cycle.
Yeah.
The upside is obvious if it works.
That's the sunny side of the street. It's a very compelling story.
And there is always a but with this company.
Yeah.
We have to look at the flip side. Because despite that great quarter, the stock sold off.
It got hammered.
It felt like the air just went out of the balloon.
It did. And that's because the market is a forward-looking machine. It doesn't care about Q4. It cares about Q1.
And the guidance for Q1 2026 was a shock.
A cold bucket of water, that's for sure.
Yeah, let's look at those numbers. They projected Q1 revenue of what, $11.7 to $12.7 billion?
Right. The market wanted more. But the real kicker was the earnings projection.
Roughly zero.
Zero.
Like literally no profit.
That adjusted EPS of approximately $0.00. The market expected 5 cents, which was already low.
When you tell investors you're going to make no money, you're going to get punished.
Especially after a year of those kinds of gains.
So why the drop?
Yeah.
Is demand drying up? Are people just not buying computers anymore?
See, that's the fascinating part. It's not a demand problem. If it were, the stock would have crashed way harder. It's a supply problem.
A supply chain bottleneck.
That's the term. It's the classic, we have orders but can't build them problem.
Which is better than nobody wants our stuff, but still frustrating.
Infuriating for investors. They've depleted their buffer inventories. And on top of that, there's a global memory squeeze.
Walk me through that. How does a memory shortage hurt them? They don't make memory.
But a computer needs it to work. You can't ship a laptop with a brand new Panther Lake chip if you can't get the DRAM to go with it.
And the massive AI servers are just gobbling up all the memory supply.
Exactly. The big AI data centers are eating all the memory, leaving scraps for the PC market.
So it doesn't matter if you have the best CPU in the world.
If the memory isn't there, the laptop doesn't ship, and you don't recognize the revenue.
So they're stuck. They have the processors, but the rest of the ecosystem is clogged.
And because of that, they're having to prioritize. Their own supply of wafers is tight as they ramp 18A, so they're prioritizing the high-end, high-margin server chips.
Which makes sense strategically, but hurts the short-term volume numbers.
And that leads to what I call execution PTSD.
That's a great way to put it.
Well, it's true. And investors have trust issues here. They've been burned by delays so many times.
The 10-nanometer delay, the 7-nanometer delay.
Every time management says it's just a speed bump, the market assumes the wheels are falling off.
That trust is fragile. And while they are ramping 18A, yields are still a concern.
Yields are everything. The number of good chips you get per wafer.
And if you look at their PC business in Q4, revenue is actually down.
Down 7% year over year.
Ouch. Down 7%. That seems to contradict the whole AI PC boom we just talked about.
It does on the surface. It suggests the boom hasn't quite arrived yet, or at least they aren't capturing it fully because of these constraints.
And we have to mention the valuation, the price tag on the stock.
We do. It's a reality check. We've seen reports putting the forward earnings multiple around 77 times.
77 times. That's growth stock territory.
It is. The stock is, it's priced for perfection.
Right. And when you are priced that high, you cannot afford a guidance miss.
Any slip-up gets punished instantly because the margin for error is gone. The market was pricing them as if the turnaround was already complete. This was a stark reminder it's still a work in progress.
It's a construction site, not a finished building.
Exactly.
So let's reset the board. We have a national champion with a government moat on one side. On the other, a company struggling with supply bottlenecks and a history of breaking promises. What do we watch next?
We have a very clear catalyst calendar for 2026. The next 30 to 90 days are critical.
Okay, give me the dates. What are we looking for?
First, obviously, the Q1 earnings report in late April. We need to see if these supply issues are actually temporary.
Is it a bottleneck or a blockage?
That's the key distinction. If they come out in April and say, hey, we're still stuck, the bull case takes a massive hit.
Okay. And then there's the product itself, Panther Lake.
We need to see these chips hitting consumer hands in volume. We need independent reviews. Is the battery life good? Is the AI performance real?
We need to see if the 18A yield is healthy enough for mass production.
If we see shortages or delays there, it confirms the execution PTSD.
And then there's my favorite part, the mega whale.
The foundry customers, this is the wild card, the one thing that could send the stock vertical.
The chatter is constant. I keep reading rumors about Apple, maybe for M-series chips, or NVIDIA hedging their bets. How real is this?
Look, right now it's speculative. We haven't seen ink on paper.
Right.
But I think about the logic. If you are NVIDIA, do you really want 100% of your chips made in Taiwan?
Probably not. You want a backup plan. Supply chain resilience.
Precisely. But here's the thing. If they announce a single confirmed whale customer, a verified contract with an Apple or an NVIDIA, it validates the entire foundry strategy overnight.
That would be a game changer. Just one name would do it.
It's the seal of approval. It's like getting a Michelin star. It tells the market, we are open for business, and the best in the world trust us.
And don't ignore the boring stuff. Operational efficiency. They're targeting an OpEx reduction to $16 billion this year.
That's under CEO Lip Bhutan, the cost cutter in chief.
He's a legend. They need to prove they can cut costs while building these massive factories. It's a balancing act.
And finally, the big picture, the Fed.
Always the Fed. Why does monetary policy matter so much for a chip maker?
Because building these fabs is incredibly capital intensive, tens of billions of dollars for one factory.
So interest rates matter more here than for a software company.
Much more. If interest rates get cut, it becomes cheaper to borrow that money. A dovish Fed is a massive tailwind for them.
It really puts into perspective how many moving parts there are here.
It's the most complex puzzle in the market right now.
So let's wrap this up with the lowdown. This company is at a massive inflection point. They have the government backing, they have the cash, over $30 billion, and they claim to have the tech with the 18A.
But right now, today, they are manufacturing constrained. They have the blueprints, but they are struggling to lay the bricks fast enough.
So the bet for you, listening right now, is simple. Do you believe the supply crunch is just a speed bump on the way to dominance?
Or is it a sign that the manufacturing engine is still sputtering and just can't keep up with the promises?
It's a high-stakes bet on execution.
It is. If they execute, the stock is cheap. If they stumble, it's expensive.
It sure is. And we'll be here watching every move. Make sure you check that subscribe button for more market clarity.
Thanks for listening, everyone.